Hi snipers, it's Alex, and in this video I'm going to show you an indicator that is ultra powerful. So this video is a bit different from my usual videos where I show you strategies, but it's mainly a video to answer a question that I've been asked a lot and for a long time: how do I draw my supports and resistances? Simply put, a lot of aspiring snipers have emailed me saying, I can't manage to draw my supports and resistances, or at least when I do draw them, it becomes unreadable because I draw way too many, and even when I go down from one time frame to another, I have trouble finding my way around. So, in this video, I'm going to show you a real sniper's trick that experienced traders use. It's called the Donchian channel. So what is the Donchian channel? It's simply a channel indicator, a bit like Bollinger Bands, but you'll see there's a subtle difference because this indicator helps you spot the highest highs and the lowest lows. I had already introduced you to an indicator that allows you to catch reversal prices. This is going to be similar but more precise and more effective. We'll also see that there's a little subtlety when it comes to using it. For those of you who are anti-indicator, don't forget that you always need to have as many weapons as possible to win the war in the markets. Without further ado, let's get in front of my computer. Thank you. Let's go. Okay, snipers, we're back at my computer. So the purpose of this video is to answer a question I get asked frequently. How can I draw my support and resistance levels simply? Sometimes I draw too many supports, too many resistances, and actually it kind of clouds my visibility when it comes to my analysis. So this indicator is super simple and it's made exactly for that. So it's not really a strategy in itself, but it can be. It's more of a tip that will literally help you decipher the market price without making mistakes. And above all, to decipher the trend in a simple way. And that's what we're going to see in this video. So the first thing you need to do is set your chart to H4 or D1. Why? Because the higher you go with your time frames, the more visibility you'll have, quite simply. The longer the time frame, the more visibility you'll get. It's as simple as that. The second thing to do is go to indicators and strategies and type in Donchian channel. So Donchian channels are channels, they're bands. They might seem similar to Bollinger Bands, but as we'll see, it's a bit more subtle than that, and I'll show you everything in this video. And thanks to this, you can identify the highs and lows on the charts at a glance. So, how does the Donchian channel work? Well, as I mentioned, it automatically determines the highs. So that means when it comes to the highs, imagine it's like a laser, okay? It's a laser, and it does something like this. You can see the low here. It directly plots the highs and lows on the charts, and that's what makes it so interesting. You see, I just have to draw a line on the Donchian channel, and we can notice here that the trend is downward. Why? Because my high here is higher than my following low, and my high is lower than my previous high. So you see, it's like a staircase, and so we know that the trend is downward. I'm going to give you a tip because here it's set to 20. We're not going to use this one entirely. I'll explain it to you in a moment. So what do? Well, here we go into the settings, into the gear icon. We're going to remove the orange and we're going to remove the lower. We'll also remove the background and slightly increase the line thickness. What we're going to do is go back to indicators and strategies, click again on the Donchian channel, and actually we're going to set 1 to 10. Why? Simply because it will provide more precision, more visibility. We're going to set it to 10. This will help us determine entry and exit points for positions. That's why it's very useful to have both 20 and 10. How do you interpret it? As I explained to you just before, you can see that it determines the highs and the lows. So if it's a high point, what we're going to do is draw our resistance line. So I recommend you do it like this. So here, this is the highest point, here as well, and here too. It's the same for the lows. So I really draw them as if they were supports and resistances. That's what you need to do. There you go. And now, so how do you enter and how do you exit? Well, quite simply, we're going to wait for the price to bounce off the Donchian channel. For example, here you can see that it touched it once. It drew a Donchian channel and then a new high was made, which appeared in this area. So what are we going to wait for? We're going to wait for the bounce off the Donchian channel. We're going to wait for it to drop because it bounced off my resistance. And all we have to do is position ourselves here and let it run until the next one. The next low, which is here. That means we can capture all of this, and that gives us 1,300 micro pips. If the candle here breaks my support, all we have to do is capture up to the next lower level. It's as simple as that. In fact, price moves in stages, and each time we're going to try to reach the new levels. Same thing here. We see that the price bounces off the Donchian channel and rises to the next level. Previous one, we're going to wait for it to break this level because maybe it will do something like this. Here, in this case, it's forming a consolidation zone and then it breaks here. All we have to do is position ourselves here and aim for the next Donchian channel. What is my price doing here? It goes up to here, right? And we see that it runs into another resistance. So the price, well, it's still bearish, but it still runs into resistance. It touches here once and then does a pullback and tries to retest, but it doesn't retest. It drops straight down. What did we do? Of course, we set our stop loss or a trailing stop, and actually we closed the trade immediately because we're still in a downtrend. So here what we took was a counter trend trade. So it goes down and then it drops. So what we can do is position ourselves here and target our next support, which was previously set here. So that's our next level. So we can take profit up to there. And here, this is our take profit, and we cash in 2,000, 3,000 micropips. We'll try on another pair, but you can see the power of the Donchian channel because unlike Bollinger Bands, which are rather vague, the Donchian channel allows us to capture the previous highs and lows, and generally speaking, the highs and the lows. It's very interesting because the highs are major resistances and supports, so it helps you avoid making mistakes. You can see here that we have a higher high, so we just have to wait for the price to hit the high and then reverse. We just need to position ourselves at the pattern level and aim for the previous Donchian channel, or another previous one, like this one for example. There you go, we just have to aim up to here, or we can go down to the next one. In fact, it works through a system of steps. What do we see here? Well, we see that the price here touches once. Our Donchian channel forms, but then we see that I have a candlestick, I have an engulfing candle that covers more than 70% of my previous candle, and I see that my indicator keeps drawing a support, so that means it's indeed the lowest point. And so after that, what does it do? It reverses. It's a very good strategy. For reversals, this indicator literally allows you to read them. All we have to do is position ourselves either at the close of the candle or just before. We can enter here and simply aim for the previous level that bounced earlier. So that's our take profit. We can set our stop loss here or here. You need a fairly attractive risk-reward ratio. We can enter here. There you go, we just have to position ourselves there. We still have a risk-reward ratio that's quite attractive, right? We can even just tighten our stop loss if our risk-reward isn't attractive enough. And we just have to take all of that, which makes 1,600 micropips in 7 days. So for better visibility, I recommend you use the D1 time frame, okay? Because you'll have less market noise, so it'll be easier for the indicator to draw the resistance levels. So here, same thing, we keep going. We can see that the high has hit again like before, so there's a good chance it will reverse. So either we position ourselves here, or we wait for the correction and enter here. And then we just have to go for our previous support that was touched. So there you go, those are still pretty good targets. So if we see that the price doesn't reverse like that and instead breaks through, then we can take a short position or wait for the next correction. In this case here, we can see that the Donchian channel is flattening out. As soon as it flattens out, we understand that it might be about to reverse. So here there's a very small counter trend, but in the end, what do we see? We see that it bounced off the previously broken support, so we know the trend is bearish. So quite simply, if you don't know how to spot a trend, you just have to circle the highs and the lows. And if a high keeps getting lower, for example, something like this, if a high keeps getting lower, it's a downtrend. If a low keeps getting lower, it's still a downtrend. For the opposite, it's the opposite. If a low keeps getting higher and a high keeps getting higher, it's an uptrend. It's like a staircase. There's really nothing simpler. And this indicator allows you to clearly spot the trend and interpret it accurately. Alright? So it's very, very interesting. You can see here, after the counter trend, it bounces here on my Donchian channel and creates a new resistance. We can see that it bounces, which is then a correction. And then we just have to position ourselves there and look for the next level based on the past. The next level, we can see here that the level has already been drawn. So just like with supports and resistances, we just have to draw here to get our next level. If you don't see it on the chart, that's it for this indicator strategy. It's not entirely accurate to call it a strategy, but actually it will help you trade rebounds better, and I highly recommend it. Alright, that's it for this video, snipers. I'll see you in front of the camera. Alright, snipers, that's it for this video. I hope it helped you spot supports and resistances, and especially to understand how trends are formed, the highs and the lows. It's absolutely essential that identifying a trend is no longer a problem for you, and that's why I strongly recommend this indicator, which will help you reach your goals more easily. We're coming to the end of this video, so if you want to become a true sniper, there's a free 1-hour training, link in the description, and for all of you out there. Well, I'll see you in the lobby. Ciao.